Hello everybody, it's Yashar here, back again with another video, and in this video I will cover the Aritzia earnings report which released yesterday after the closing bell. Aritzia shares are up 21% at the time of recording this video after the company released its earnings report yesterday, and some analysts started to raise their price target for Aritzia. Aritzia had a phenomenal growth between 2016 and 2023. Just look at these growth numbers. The revenue went from 542 million a year to almost 2.2 billion a year in just 7 years, which is a 22% average year-over-year growth. Their net income was going up even faster at a 29% average year-over-year growth during the same time. And the company opened more and more boutiques, which could turn in a profit in less than 18 months. This rapid expansion resulted in Aritzia to become a new fashion trend in the industry. Aritzia currently operates 117 boutiques, including 68 Canadian stores and 49 US stores. And of course, they have their e-commerce business on their website, which is growing fast. So the story was going great until last year. We had record inflation, decreasing consumer spendings, which is awful for a company like Aritzia. And at the same time, Aritzia started to invest heavily into their infrastructure by opening up a new distribution center in Toronto, increased their administrative costs by increasing salaries and their ad campaigns budgets, and also ordered a lot of inventory due to COVID supply chain issues, which caused their inventory to go up rapidly, and as a result, their margin compressed. On top of this, in 2024, the company could not grow its revenue nor its net income, and it was basically flat after such a successful growth in 2023. This caused the stock to crash over 50% in the last year as they continue to post disappointing numbers quarter after quarter, and everybody has started to hate the stock and panic sell the shares. What I tried to do during this time when I was down almost 50% on my position in Aritzia was to keep my cool, held all of my shares, give management team at Aritzia some time to figure things out, and slowly buy more shares of Aritzia during this dip, as I thought the Aritzia business issues are transitory and they're not fundamental. The company reported new earnings yesterday after the market close, and while the numbers are still not great, it looks like Aritzia management team are solving the inventory issues. Their new distribution center is now up and running, and we can hopefully see margins coming back soon. Let's go over the most important numbers in Aritzia earnings report. Their net revenue in the current quarter is up 4.6% compared to the last year to $654 million. This was a major beat on expectations by analysts, as the average analyst estimate was only $621 million. So the company was able to beat these expectations. The company also reported an increase in comparable sales, which is one of the most important metrics in the retail industry that excludes the sales in the recently opened location. So the comparable sales was up 0.5%, which means Aritzia is still growing top line even in this difficult macroeconomic environment. The gross profit is slightly up 0.1%, but their margin was down 180 basis points due to their warehousing costs and of course the higher markdowns in this quarter. Their selling, general and administrative costs were up 14.4%, which is still an issue for the business. Their net income was down 37%, but this is mostly the impact of the new distribution center and new boutiques. And in my opinion, the most important figure here is their inventory, which is down 21.9% year over year. And that is better than the previous estimates. And this is exactly what caused the stock to go up 20% today. If Aritzia can solve their inventory issues, then the margin will expand again in future and they can easily increase their net income. And so far, the trend seems like Aritzia management team were able to significantly reduce the inventory this quarter, which is great news. Jennifer Wong, the CEO of Aritzia, had some remarks about these numbers in the earnings report. So these are her words. Aritzia delivered third quarter net revenue of $654 million, an increase of 5% on top of outstanding growth of 38% in the third fiscal quarter of 2023 and 63% in the third quarter of fiscal 2022. Although the consumer environment remains mixed, we generated sales growth across all of our geographies and channels as clients responded well to our new styles and outwear offerings. As expected, we saw sequential margin improvement in the third quarter, and we made ongoing progress in executing against our fiscal 2024 priorities. Our new Toronto area distribution center successfully ramped to accommodate record volume, and we further improved our inventory position. Okay, after reading Jennifer Wong's comments, I should also discuss the balance sheet of the company, the outlook of the company, and also their strategies. The company has $140 million in cash right now. They bought back 700,000 shares or $20 million worth of shares in 2023, and they authorized to buy another 3 million shares in 2024. As the shares of the company is cheap, I think buying back shares right now can be a good investment with good return on invested capital for investors, especially when the business has virtually no debt and they have a strong cash position. For the next year, Aritzia revenue is forecasted to increase by 6 to 7%, while the margins should still be flat or down slightly due to increase in marketing and administrative costs of the business. The management team at Aritzia believes that they should be able to start grow extremely fast again after 2024. They forecast a 15 to 17% CAGR growth in net revenue by 2027, which can be great for investors. So the last question is, what is my strategy with Aritzia? As I mentioned, at some point I was down 50% on Aritzia and still didn't sell any shares. In fact, this is not the first time that I'm in this position. Less than 18 months ago, I was down 65% on our position in Meta. And Meta Platforms was also struggling with increased costs at the time. Today, my wife is basically up 140% on her position in Meta. A company that everybody told me that I was wrong on and I had to sell shares is now up over 140% in just 18 months. While Aritzia is more risky than Meta, I still believe Aritzia can continue its growth in the future, and the investments in the new warehouses and e-commerce business will result in margin expansion over the long term. Hopefully this short-term pain will result in long-term success for the company and investors. If Aritzia management team can fix the margin problem and inventory issues, I believe Aritzia share price will also rise again to $40 range in 2024. So for now, I will keep my shares, buy few more shares here and there, and monitor the next earnings report of the company. There you are, guys. I hope you enjoyed the video. I will be back with updates on other Canadian stocks soon, but until that time, I see you guys in another video. Farewell.